Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you all, depending on whichever part of the world you are tuning in from. I'm very excited, as always, to welcome you all to yet another promising edition on the Forex Morning Mastery. In fact, our midweek review, where we are going to be coming together to review how well the market has performed since the beginning of the week. We are also going to be looking at what positions we took and how well we've done so far and how we intend to practically take advantage of any potential opportunities during the second half of the week. And in fact, the market landscape has been filled with new developments, which has also incited very complicating sentiment in the market at the moment, especially across the US dollar pairs, where remember we have talked about how the US economy had submitted not too impressive figures in the last 2 to 3 weeks. Not until last week we begin to see some figures showing some resilience in the US economy. And following this report, that is the US PMI, which came in on Friday, higher than market expectations. Federal officials have been very hawkish in their statement. We had a couple of speeches yesterday and on Monday, and from the highlight we can come up with is that Fed officials still want to maintain interest rate higher for an extended period of time, which for more or less is an hawkish remark. Whereas in the market, and economists are projecting a possible interest rate cut due to the sluggish economy, the easing of inflation too, as well as also projected this sentiment in the market. So we are caught within two dichotomy. We are caught within dichotomies where we have the Federal Reserve maintaining interest rate, and all indicators, economic indicators, is looking at cutting interest rates. So within this dichotomy is where the market dynamics is, and today we are going to be looking at how the market participants are digesting this information and how they have been playing out in the last 48 hours to decide what may likely happen during the second half of the week. So I encourage us all to stay tuned in, grab your favorite beverages so that you wouldn't miss out on the ideas we will be deliberating on today. And before we even go further, I would like to also welcome newcomers in the house. I know there will be some of us who are joining for the first time and may be wondering what this is all about. Well, the Forex Morning Mastery is a platform where we all come together to have a deep understanding into the current market dynamics using both the technical and fundamental perspective to have a detailed understanding into the market. So we shouldn't consider this as a signal service platform, but an educational tool that we can use to have a deep understanding into the market structure. So we come together as a community and engage in follow-ups and reviews of our current positions in preparation for the day, and we do this 3 times in a week. That is Mondays, Wednesdays, and of course Fridays. And my aim here is to equip ourselves with the knowledge and skills necessary to make informed trading decisions independently. And trust me, the more time you spend with us in this community, the better you get to understand my analytical approach, which eventually will enhance your own trading decisions and strategies. So once again, I welcome you on board and encourage you to actively engage in the comment section. So with that being said, we will be diving right into the business, and please do not forget to give the video a thumbs up. Your likes are very important, valuable to me, and in fact it goes a long way in supporting this community to grow. Thank you very much as you do so. So with that said, I see you, Constant Tameklo. Good morning to you. Glad to have you around with us this morning. Trust you're doing very well. So the first thing we normally do here is for us to keep tabs with the fundamental factors that is going to be influencing the sentiment in the market, at least for the second half of the week. And by monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and, most importantly, timing to position ourselves strategically for whatever opportunity the market will bring prior, during, and even after this economic event. Now, based on the assets we have been monitoring since the beginning of the week, we've been looking at the USOILSPOT, the GBPUSD, and of course my favorite, the XAUUSD, popularly known as the gold spot. Now, based on these three assets, we are going to be focusing on economic features from the United States and the United Kingdom economic docket. Usually we focus on high impactful event, but if there are no, in the absence of no impactful event, we look out for mid-tier economic features so that we can have a broader view into what market participants will be looking at. Now, zooming into the economic calendar here, the week has started with a bunch of mid-tier economic features, which has been characterized mostly by Fed official speeches, which I did tell us earlier that Fed policymakers have been very hawkish lately, despite the sluggish US economy and of course the reduced inflation. Remember, the CPI data came in below market expectation. The producer price index too as well came in below market expectation, and of course the consumer sentiment index too came in below market expectation, except for the PMI data on Friday, which came in higher for the manufacturing sector and the services sector, which has further incited the idea that there might likely be a resurgence of inflation in the United States. Now, as a result of this, we have a dichotomy in the market right now. There is a majority are considering following the Fed Reserve stance of keeping interest rate higher for an extended period of time, but the other parts of the market, majorly economists, are considering that the data on ground suggests that the Federal Reserve is likely going to cut interest rate anytime soon. So we are caught within this contrasting views. So we want to really understand how the market have digested this, and this will reflect on the chart as price action. But however, even though it will reflect on chart as price action, we still need to look out for fundamental factors that will buttress and tell us where the market is likely going. So besides the Fed chairman's speech that came, the Fed official speech that came in the last 48 hours, we are also going to be looking forward to another high impactful event today, which is the what's it called again, from the United States, of course, and that is the bank stress test info. Now, for those of us who are not familiar with this term and data, just to give you a quick brief of what it's really all about. Now, this data here is the assessment of major banks. Actually, they look into major banks' ability to withstand economic and financial shocks, and the result of these stats can significantly impact the currency market as they provide insight into the stability of financial institutions. Now, positive result can bolster confidence in the banking sector, potentially strengthening the currency of the US dollar, while negative result can lead to market volatility and of course currency depreciation. So we need to take that into consideration. So we will be looking forward to that data, which is coming up much more later in the day. I think in about 12 hours approximately, that will be coming up. So we want to be on our financial news to listen to what that is going to say. Besides that, looking at the mid-tier economic features, we have the new home sales change report, which is coming up in about 5 hours from now. And considering the fact that the housing sector is considered to be one of the sensitive aspects of the US economy, a majority of market participants may want to look at what the figures will be saying. and it gives us how much demand for goods and services within the furnishing and financing home sector. So we want to have an insight into this. Now, looking at the previous month, there was a deficit, there was a contraction of a deficit of 4.7%, though there are no projection yet. But we want to look forward to see what the data will say today. Will it come in just as expected, below expectations, or even beyond expectation? And if the data comes in higher than the previous month, there is a high chance that it could favor the US dollar positively. So let's keep that in mind, mark out the timing for that one. Then beside these two events we are looking forward to today from the United States, there are some other events coming up on Thursday and Friday which will definitely influence how market participants will behave today. Now we have the I will just talk about the major ones that we are looking at for tomorrow and Friday, and one of them is the gross domestic product annualized for Q1 from the United States, and this will be giving us an insight into how healthy the United States economy is in the last one quarter. So has it expanded or has it contracted? Well, economists are projecting a 1.3% expansion just like the previous quarter, so we look forward to see that one. And of course, the anticipation of the GDP data has a way of influencing how market participants will behave, in the sense that major key players may want to step aside, especially from the US dollar market or the gold market, to wait for the data to come in before making any aggressive bet. And as a result, we could be seeing some extended sideways trading activities, which you will have noticed in the last 24 hours as being the order of the day. Then another event we will look out for tomorrow, which is the initial jobless claim count. It's a labor oriented data, and if you remember what the Fed chairman said last week following the interest rate decision from the United States, he did emphasize that though inflation appears to be gradually thinning out, but they will still need some more data to buttress this. And one of the things he mentioned is that they will be looking forward to labor oriented data. So initial jobless claims count coming up tomorrow is another event majority in the market will be looking out for. Now, if the data comes in larger than expected, it indicates weakness in the labor sector, and if it comes in below market expectations, then it would indicate that there is an expansion in the labor sector, though the majority of the market are projecting a higher turnout. So things are not looking very rosy for the United States at this point, which is more or less one of the reasons why economists are saying that it's likely that Fed will cut interest rate anytime soon. Then we're also going to be looking at the UK GDP data on Friday and the US core personal consumption expenditure, that is the core PCE, which is also considered to be an inflationary gauge data, which the Fed will also be looking forward to see the pressure the inflationary has on the US economy. So these are major events coming up later in the week, but they have a tendency of influencing the sentiment in the market today. So we also want to take this into consideration and ensure that whatever position we have running or active, we need to secure them adequately because of these choppy market conditions that is expected prior to this event. So I would like us to take note of this. And with that said, let's dive right into the chart and let's look at things from a technical standpoint. So I'm yet to open my USOILSPOT chart, so I'll just do that right away. It usually takes a while for my USOILSPOT chart to come up. Let's see. So I will just try to open 2 pages and let's see which one comes up first. If you are yet to click on the like button, please do. We have over 10 people on board and the likes we have here is still counting 4. So let's make the like tally with the number of people on board, and thank you very much guys as you do so. So I'm still waiting for my chart to load up. All right, so here we go. Give me a moment, please. I'm trying to. Thank you very much guys for your support. I saw a couple of more likes now. Please let's make the like tally with the number of people on board. This is one cheap way you can actually support this channel to grow. All right, so let's roll in. So the first asset we are looking at this morning is the USOILSPOT, and in fact we had a positive start to the week. Remember, we were buying this asset on Monday. We talked about buying right above that key level at the $80.50 level before we saw some barrier emerge around the $81.75 area. Now, before I go into the details, please note that we are only going to be deliberating on the 1 hour time frame, which is our execution time frame. So we've already done a top-down analysis on this asset at the beginning of the week. So if you had missed out on that session, I encourage you to watch that video so you can have a background knowledge of how we got to the point you are seeing on the chart right now. And it can also serve as an educational tool for you to understand how to use price action based technical analysis in conjunction with fundamental factors to understand the market dynamics. So the links are right in the description box of this current video you are watching. So right here on the 1 hour time frame, as at the beginning of the week, we did acknowledge that price action was still trading above our ascending trend line. Remember, we had this ascending trend line identified on the 4 hours time frame, and you know how we use our trend lines, our ascending trend lines in this community. As long as price remains above the ascending trend line, we want to be looking out for patterns and structures that support the idea of buying that asset. Now, with this understanding in mind, we saw that price was still trading above the key level, in fact oscillating around the key level during the first 12 hours of the week. As you will see, price was confined within the $80.68 level and the $80.20 area, emphasizing the prevailing uncertainty at that point in time. And of course, you know how we do it whenever we have this kind of structure on our chart. Knowing that there is an indecision, we exercise patience and wait for price action to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. Of course, price never breached that support line, so it negated the idea of even considering selling at the beginning of the week. Now, we saw the situation happen where price broke out both the key level and the $80.68 level to trigger our first buy position for the week. Then we also had multiple entries. Of course, we had one at the breakout of the $81.30 level. Then we also added another one at the breakout of the $81.75 area. Obviously, the third one did not do very well as we got stopped out in a loss on that one. But the first two positions, we were able to scoop in a modest size of profit on that one. So, at the first trading day of the week on the USOILSPOT, we did very well on this asset. Now, moving into Tuesday's session, we begin to notice selling pressure. If you saw my update on the USOILSPOT yesterday morning, I did acknowledge the fact that sellers are beginning to gain some traction, especially during the Asian session, resulting into price dropping, taking us out of all the buy positions we had on Monday. Now, with the situation there, I mentioned in my commentary that the ascending trend line is going to be playing a significant role in guiding our trading decisions for yesterday, where the breakdown of the ascending trend line could signal selling opportunities, or if price continues to maintain bullish traction above the trend line, then we will be buying above the resistance line of that structure. Now, what we saw here was quite interesting. We saw price drop, breaking down the ascending trend line yesterday prior to the New York session. I think about an hour or two prior to the New York session. Then we saw price come back to retest structure, and this gave us an opportunity to sell as we were able to run this 85 pips move to the downside before the bullish traction resumed. And I do hope that you know how we do it in this community. Whenever price moves significantly well in our favor, we want to move our stop losses to secure the position. I do hope you did that accordingly. If you had done that, you must have been taken out with a modest size of profit. Then this morning we saw price come back into the entry point as at yesterday, and of course you see we had an engulfing bearish candle. Some of us took this position. I got some personal DMs, and at this point I want to emphasize that if you had sold that second entry, please kindly move your stop losses to break even at this point in time, as we begin to notice buy traction resume all over again. Since the beginning of the week, you've seen our price had consistently found higher lows. Look at the lowest point for this week right here, and look at what happened here. The inability of sellers to find lower lows for me is a signal that buyers may likely be gaining some traction. And following this bearish leg, that bearish move that started this morning, you can see as soon as price got into the $81 level, we saw another buy pressure resume from that particular area, which for me could be a sign that buyers may be gradually gaining some momentum behind the scenes. Now, with this idea in mind, how are we going to navigate this current market dynamic today? Please, first of all, please move your stop losses to break even on all existing sell position on the USOILSPOT before we go further into the details. Now, before we look at the technicalities of how we are going to be managing these positions today, it is very, very important for us to also have a deep understanding into the fundamental factors behind the scenes, which is influencing the sentiment in this market. Now, during the Asian session, we noticed this that there was fresh buying pressure. So this is the Asian session. The Asian session started somewhere around here, and we saw buy pressure resume again during the Asian session, which for me could be a signal that we could be seeing some increased demand at this point. However, if we look at the there are various factors behind the scenes, of course, which has been influencing the sentiment in the market. We are talking about geopolitical tensions in the Middle East. We are talking about the Ukrainian attacks on Russian refineries in recent times. And of course, we are also talking about the intended all-out war that Israel is trying to declare on Hezbollah in Lebanon. And this may fuel further provocations in that area, raising concerns about supply disruption from key oil producing countries from that particular region. And of course, we know this is where most of the global oil supply, this is the region where the most of the global supply comes from. Then another factor that is behind the scenes that is influencing the sentiment in these markets is the worries about weaker demand in top oil consuming nations like the United States. Now, yesterday, the American Petroleum Institute API report showed that US crude oil inventory unexpectedly rose by 914,000 barrels in the previous week. So now, some of us who are new here may be wondering, how does this influence the sentiment in the market? In fact, it is quite enormous in the sense that when there is an unexpected rise in crude oil stockpile, like this case scenario we are having right now, there are chances that sellers may begin to push price to the downside. Now, what's the implication of unexpected rise in crude oil stockpile? Now, what this simply means is that if there is an increase in crude oil stockpile, it's a sign that the demand in the market is not sufficient enough to take the supply that is pumping into the market. Now, if there is less demand, what happens? They have to save. Since there are nobody to buy this commodity, it has to be saved in the stockpile. So increased stockpile means that supply is higher than demand, and our simple economics tells us that when supply is higher than demand, what happens? Price will drop to the downside because of the surplus of the commodity in the market. So that is one scenario we want to take into consideration as well. However, in as much as these factors are playing behind the scenes, there is a factor supporting the uptrend, there's another factor supporting a downtrend. Market participants will be awaiting the US oil and fuel stockpile report, which is coming up later today. Then besides this, attention will be shifted to the US GDP data coming up tomorrow. We also have the US core PCE, another inflationary data, which will be giving us an insight into whether or not inflation is dropping in the United States. So I'm of the opinion that these two major data from the United States may be a key determinant factor of where price may likely be going for this week and next week. Now, the anticipation of this event may likely cause some extended sideways trading activity in this market today. So we need to be very, very careful, and whatever decisions we are going to be making today must come out of a significant confirmation. Now, given this developments, what are we going to be doing to navigate this current market structure? So what we want to do right now is to look into the chart and see how market participants are digesting this information and how they intend to run this current structure. Now, going back into the chart from a technical standpoint, we've seen here that price action has broken down this ascending trend line, which we identified on the higher time frame. Let's look at it together again on the higher time frame so that we can all be on the same page. So if you look at the structure closely, you will see how this ascending trend line here on the 4 hours time frame has supported this bullish momentum since the beginning of this month of June. And when connecting the series of higher lows here, we have this beautiful ascending trend line. Now you know how we use our ascending trend lines here. As long as price remains above the trend line, we want to be looking out for patterns and structures that supports the idea of buying. Now, the only condition that will make us start considering selling is for this ascending trend line to be breached and broken to the downside. And it appears we are seeing something like that happen yesterday. As we saw this happen, price dropped to the downside. Could this be a bearish signal for us? That's the question we want to be asking, where the retest of the trend line will be a confirmation to join a downtrend move. Now, in addition to this ascending trend line is the fact that price action is currently trading and oscillating within a strong supply niche between the $81.75 level and the $80.50 area, an area which has been peculiar with selling pressure since the beginning of the month of May. Now look at what has happened here in the last couple of weeks. We can see a lot of consolidation phase, a lot of indecision going on at this point in time. Now the question here is, how will markets react to the structure, considering the figures, considering the data we talked about earlier? So we have a range bound structure here. So if I draw this out correctly, you will see that we have between the $80.50 level and the $81.85 area, which has been showing signs of indecision, prevailing uncertainty around that area. And usually whenever we have such structures, we usually exercise patience and wait for a signal, which will come in the form of either a breakdown of the support line to give us an opportunity to sell, or the breakout of the resistance line to give us an opportunity to buy. So at this point in time, we could actually buy this asset considering the fact that the trend has been bullish since the beginning of the month. However, we should consider that price is within a supply zone. So there are two ways through which we can capitalize on buying opportunities here. One is to buy at the breakout of the range structure, that is the resistance line of this range. That is one scenario. The other one is we can buy right now. Now, for those of us who can buy right now are those who are already profitable on the US All Spot. So that means you can leverage on some of the profit you had made so far this week to test water and see if this bullish move is going to work. So if it doesn't work, we know that we are only risking some of the profits we had made so far this week. But if you are new and this is your first position on the US All Spot, or you are yet to make some profit on the US All Spot, then I will encourage you to wait for significant confirmation or a breakout of that resistance line. Now, with this information we had here, let's scale back down into the 1 hour time frame. I just needed to show us this so that we can all be on the same page. Now, scaling down into the 1 hour time frame, let's look at what is going on. I think I need to do some little adjustment here based on the recent development in this market. So I'm beginning to see something new in terms of my trend line here. So let me do this quickly and let's look at, okay, beautiful. So if you look at this, I have something like this. Let me project this out a little bit. So I'm going to delete this one and leave this two to guide our momentum today. And in fact, if you look at what we have here, the IPS price is still sitting above that ascending trend line. So it may still makes a lot of sense for us to consider buying around this area. Now, which area will be much more reasonable to join? Now, scale back down into the 1 hour time frame and look at what we have here. So let's zoom into what has been going on since the beginning of the week. So the lowest point price action I tested this week is the $80.20 level, and as you will see, sellers have been struggling to break through that structure. Now, the next attempt by sellers to drop and find a lower low was obviously negated by buyers, as we see here. And in fact, if you look at within the higher low here, you will see a couple of hammer candle, which theoretically signals that buyers are still present in this market. Now, the third attempt here is about a couple of hours ago. As you will see, price was unable to break down that ascending trend line, which for me is a signal, a positive signal that buying may make some sense at this point. So if we are going to be buying this one right now, I'm suggesting that above the $81.30 level looks quite reasonable to buy right now. So placing a buy stop order or even clicking a buy at this point makes a lot of sense. And then let's look out for more opportunities to buy if price action breaks out of the $81.75 level. Now, in terms of our stop losses, remember, I always say this in this community, that for every trade you are going to take, you need to have a well-defined risk management strategy, which must be consistent with all the trades you take from your portfolio. Now, with a stop loss here, your stop loss should have enough breathing space. Of course, we want it to be right below that ascending trend line, which will be dovetailing to about 40 to 50 pips, 35 to 40, 50 pips thereabout, depending on where your own stop loss is and what type of trader you are, be it scalper, day trading, or swing trading, depending. So with that said, we're looking out for more opportunities to buy at the breakout of the $81.75 level if price action does that. So that is how we are going to be buying the US All Spot for today. Now, in as much as we are looking out for buying opportunities, you know how we do it in this community. We also want to keep tabs with the potentials the sellers also have in this market. Remember, we were talking about the unexpected crude oil increase in stockpile for last week, which was a sign that supply is much more higher than the demand in the global market. Now, due to this latest development, there could be selling pressure, and of course, if sellers are going to be taking over this market, how do we want to join the bearish momentum? What are the things we are going to be looking out for on the chart that will make us feel confident joining a sell? Now, the first thing first here is this key level at the $80.50 level, where I will need price action to break down that key level at least before start considering selling. However, we could have a privilege of joining the bearish momentum even before the breakdown of the key level happens. Now, one of the things we are going to be looking out for is this breakdown of this ascending trend line. Remember, this ascending trend line has been supporting the bullish bias since the beginning of this month, and if a breakdown retest of this trend line happens today, that will be the first time price action will be breaking down that trend line, and in fact it will be breaking the trend line after price action was finding selling pressure from the supply zone, which has been consistent since last week Friday, as you will see here. So a breakdown retest of the ascending trend line could give us the privilege of joining the bearish momentum early enough, where a sell stop order will be right below the $80.50 level to maximize the potential of the bearish move. So let's see how the market will play out at this point. We have a buy position running at this point. We're looking out for more buying opportunity, but if it so happens that we get taken out of this position, then we are only looking out for sell positions only when the breakdown retest of the ascending trend line happens. So this is my simple view on the US oil spot for today. I encourage us all to mark out these levels accordingly on our chart, as we are going to be needing them as a reference point to guide our independent trading decisions for today. And if you have any questions whatsoever, feel free to let me know in the comment section. Any question whatsoever, you need some further clarifications, anything about the financial market, trust me, I'm here and willing to be of help in that regard. So I will be taking the next 10-15 seconds off just to see if there are any questions before we move on to the next asset on our watch list. You can also use that time to mark out this level, and also don't forget to give the video a thumbs up. Thank you very much. See you soon. Cheers. All right. So in the absence of no questions, I want to assume that we are all on the same page. I see you, Sahad. Good morning to you. So with that being said, let's dive right into the next asset on our watch list. So the next asset we are going to be looking at is the GBPUSD, that is the British pounds against the US dollar. And at the beginning of the week, we were buying the GBPUSD, and I think we had a couple of buy positions in an attempt to maximize the potential of the bullish move before the bearish momentum began. And in fact, the the contrasting policy outlook between the Federal Reserve and the Bank of England, coupled with the upcoming United Kingdom elections uncertainties, have weighed on the GBPUSD pair, despite the prevailing risk appetite in the market at this point. And for the sake of clarity and for the sake of educational purposes, let's quickly run through what really happened at the beginning of the week and what led to the decisions we made. Now, we are going to be deliberating on the 1 hour time frame. If you want to have a view of what we did last on the beginning of the week, where we did a top-down analysis on this asset, I encourage you to check the links right in the description box below. Now, at the beginning of the week, we had this range-bound structure. Well, first of all, before the range-bound structure, remember last week we saw a massive decline in the British pound as price dropped during the second half of last week, following the interest rate decision from the Bank of England, which was left unchanged. Now, that dovish outlook during that incident really affected the pound sterling, and of course we saw how price continued to find lower lows and lower highs throughout the second half of last week, and this resulted into a descending trend line we spotted here at the beginning of the week. And of course we did say that this trend line here will play a significant role for the first half of the week, where if price trades below the trend line, we look out for selling opportunities, and if price ever breaks out of the trend line, then we'll start considering buying the GBPUSD. Now, besides the trend line, we had a range bound structure. As we saw, the week started with a bullish note. Price started around the 1.2630 area, and for about 10 hours or so, price action was confined within the 1.26525 and the 1.2630 area, giving us an insight into the prevailing uncertainty at that point. Now, you know how we use our range bound structure. Of course, whenever we have price within a range, we wait patiently for a signal in the form of either the breakdown of the support line, which obviously will be within seller's territory, as that area is right under that descending trend line, and of course a breakout of the resistant line of the range will have seen price action break out of that descending trend line, giving us an opportunity to buy. So at no point in time did we see price break down the support line, so it negated the idea of even considering selling. And of course, with a buy stop order above the resistant line of the range at the 1.26525, we had our first buy position for the week. Then we kept on adding more position. We added another one at the breakout of the 1.267, though that one did not last long before the bearish momentum came in, taking us out of all buy positions. And as it is right now, we are within a very important confluence. This morning we have a sell. I personally had a sell position triggered around this area, but I mentioned in my commentary that we want to see how the market is going to be reacting to this important confluence, where both the ascending trend line and the key level for this week at the 1.26750 area meet. Now, depending on what happens around this area is likely going to be a key determinant factor of what will be happening this week. Now, I also want to buttress here for those of you who probably have missed out on this idea. Our key level usually serves as a yardstick guiding our trading activity for every week. Now, the way it guides our trading activity is that when price is trading below the key level, we want to be looking out for patterns and structures that support the idea of selling. But if price breaks out of our key level, then we want to be looking out for patterns and structure that supports the idea of buying. Now, with the situation we have here, price action appeared to have broken down both the trend line and of course the key level, which for me is within seller's territory. And of course, looking out for selling opportunity at this point is looking very, very reasonable. But before I go even further, I want to emphasize some key factors behind the scenes which may influence a positive traction in favor of the US dollar. Now, in the absence of significant buying activities in this market in recent time, as we've been seeing selling pressure in the last 24 hours, I think that the hawkish remark from the Federal Reserve policymakers have gone a long way in influencing the US dollar against the pound sterling. And in fact, yesterday evening, we also had another speech from the Fed official, and it went on to further highlight that they will be maintaining higher interest rates, and speculations in the market, despite speculations in the market saying that interest rate is likely going to be dropped due to the not too impressive figures from the United States. So we're still within this old dichotomy, but I think that the hawkish remarks from the federal official may, at this point in time, overwrite the expectations by economists and market participants actually. So I still think that the path of least resistance for GBPUSD is still looking very bearish at this point in time. And another factor here is the possibility of limited buying power for the British pounds, especially as market participants look forward to the UK general election coming up July 4th. This kind of scenario, this kind of time is a very sensitive era where majority might not want to take aggressive bets, especially on the currency assets which is in tune with an economy which is about to go into an election. So from a technical standpoint, we are going to be focusing our attention within this area, where depending on what happens around this conference will determine what our next line of action will be. So now, how are we going to navigate this current market dynamics today? Now, for those of us who are sold below the key level and the trend line, well done to you. You currently must be running with about 7.576 pips thereabout. Please ensure you have a wide stop loss range. We want to give enough breathing space for any volatility around this area. So I'm suggesting somewhere around the 1.26990, 1.27 area as a stop loss. That's about between 15 to 25 pip stop loss we'll do on this one, giving enough room for price action to move around. Now, moving into the structure here, the buyers is looking very bearish at this point in time, so we are not considering buying anywhere below the key level and that ascending trend line. So at this point, it's looking most bearish. So a price may likely come back. For those of us who had missed out, we may still price come back into structure or even retest the trend line, where continued selling pressure on our lower time frame will be all we need to continue the downtrend move. So we maintain a bearish bias here unless price action climbs back above the ascending trend line. And in fact, I have a buy stop order sitting above the 1.2700 area. Remember, this was our key level for about 2 to 3 weeks prior to last week trading session. So if a breakout of this whole area happen, price will have taken out all the sell positions within this area, giving us the privilege of joining an uptrend move. But let's see if we can have the opportunity of joining a bullish momentum even before that breakout happens. That is, if I can see something like price climbing back above the trend line, where continued buy pressure persists above the structure, then I can start considering buying even before the breakout of the 1.2700 level happens. So that is how I'm going to be buying the GBPUSD today. But trust me, I will be giving you updates on both my TradingView and Telegram platform. So let's see how the market is going to play out. It could take about 2-3 hours before we have some significant formation happen on this chart, and I will definitely give you updates on my TradingView and Telegram platform. If you have any questions on this one, or you need some further clarifications, feel free to let me know in the comment section. So as always, I will take the next 10-15 seconds off. Let's see if there are any questions before we move on to the final asset on our watch list for today. Use that time as well to mark out those levels, and do not forget to give the video a thumbs up if you are yet to do so. And for those who have done so, thank you very much for your support. I really do appreciate it. See you in about 10-15 seconds. Cheers. All right. So I see you C40. Good morning to you. It's better late than never. Glad to have you around with us this morning. I'm very excited to hear about your good news as regards to the US All Sport. Well done to you, and kudos for being part of that uptrend move. Now, it's important that we do not get too excited about our wins, so let's keep calm. And the week is still very early. We still have about three days to go, and we could still maximize some profit, be it bearish or bullish. I hope you saw my US All Sports analysis session, but if you missed out, you can still watch the replay immediately after the live session ends. All right, so follow up on your US All Sports. Welcome C40. All right, so in the absence of no questions, I want to assume that we are all on the same page here. So in that regard, we shall be moving right into the final asset on our watch list for today. Stay tuned in. So the next asset on our watch list for today is my favorite amongst them all, and that is the XAUUSD, popularly known as the gold spot. And did any of us take on the sell positions this morning? Did any of us take on the sell position? I had a sell stop order before going to bed yesterday, but I woke up this morning, saw my sell position triggered, running with about some pips in profit, and I did updated us this morning that we should move all our stop losses to secure the current sell position as we begin to notice buy pressure re-emerge again, especially during the Asian session. So I hope you are all out of the current sell position right now. If you have done so, well done and kudos to you. Now let's look at what has happened since the beginning of the week. What has really gone up? What has really happened here? It appears that the gold market is a little bit sluggish this week, though we had some opportunities of buying at the beginning of the week. I had a stop loss hit as well. I remember our first buy position was doing very well before we saw price snap back into entry point, giving us this choppy market condition. Was taken out with a modest size of profit on that one, but I also had a buy stop order again right here during the later part of the New York session yesterday. It got triggered, but it went into stop loss. So we're still struggling with the XAUUSD, and of course the sell position too is not really doing well at this point in time. And of course you can tell that market participants are very indecisive at this point in time, and we all understand why that is happening. I told you about the dichotomy in the market. I told you about the hawkish remark from federal officials, which has been bolstering the US Treasury bond yield. And of course we know how the US Treasury bond yield is directly proportional in value to the US dollar. So the US Treasury bond yield is doing very well. It is expected that the US dollar too would do very well. Now, due to this uncertainty in the market, major key players appear to have stepped aside from the market, waiting for US macroeconomic data like the US GDP, the US core PCE data, and of course the bank stress test, which is coming up much more later today, to have an insight into the economic outlook of the United States, and of course know what the inflationary pressure is, which could be a determinant factor of whether or not the Federal Reserve is going to be cutting interest rate anytime soon. So these are factors here that is contributing to this consolidation phase in this market. So, and if you remember at the beginning of the week, I told us all that we could see an extended sideways trading activity due to the upcoming US economic features on the economic calendar. And this is exactly what is happening right now. Now, looking at the structure here, what are the chances we have to either buy or sell the XAUUSD? Now, before we go into the technical details, I do have a a couple of market drivers that will be influencing the sentiment on the XAUUSD for this week, and I would like to share them with you. As you will see here, we have a couple of various factors behind the scenes. One of them is the Federal Reserve hawkish stance, which I've talked about earlier. Then we cannot ignore the escalating tensions in the Middle East, including concerns about an all-out war between Israel and Lebanon. And of course, the Russian-Ukraine war too is also a key determinant factor that increases the appeal for safe haven assets such as gold. So during uncertainties like this, you see major key players move their funds from currency assets into non-interest yielding assets like gold. Then another factor here that will be influencing the sentiment in this market is the economic data and rate cut expectations. So we had weaker US consumer and producer prices for May, a sign that shows that inflationary pressure is gradually easing in the United States. However, hawkish remarks from federal officials. The Fed chairman states that they want to maintain interest rate higher, waiting for labor-oriented data to have an understanding that inflation is down or not. And of course, I told you earlier that we are looking forward to the initial jobless claim coming up today, I guess. Yes, I guess it's today. Let's see. We'll look at that in a moment. I guess it's today. Let me look at that quickly and see. So today okay, that's tomorrow. Tomorrow is the initial jobless claim count, so it's tomorrow. So this is one data that majority will also want to be looking forward to. And then which other one again? The GDP print for Q1 coming up tomorrow as well, and then the core PCE data coming up on Friday. So these data points are expected to influence the Fed's future policy decision and provide fresh directional impetus for gold prices. So these are the major key drivers in the market. Then another thing I keep omitting from these drivers is the central banks purchasing of gold commodities. Majority of the major central banks across the globe has been building their gold reserve in the last 1 to 2 years, and most especially the Chinese government has also been doing this for the last 18 months, except for April and May that recorded no growth in their gold reserve. But we might still see some increased buying from Eurasian central banks and the likes, and this could further escalate the prices of gold. Now, considering all of these factors behind the scenes, I'm of the opinion that the path of least resistance is still, at this point, based on the fact that price action is trading below the ascending trend line, is still going to be looking very bearish for me. Now, I would like to share something with you on the 4 hours time frame. Let's look at this together. For those of you who watched my weekend video on the XAUUSD, you will be familiar with this current structure. Now, remember that we had this key level for this week at a 2,320. So a quick reminder, our key level serves as a yardstick guiding our trading activities for every week. Now, if price trades below our key level, we want to be looking out for selling opportunities, and if price climbs above our key level, we want to be looking out for buying opportunities. Now, look at what is going on here. Besides the key level, we also have the support line of this ascending channel, which was broken yesterday. Now look at this. We have an ascending channel here, and of course you can see price had broken down both the ascending trend line and of course the key level. So for me, we are within seller's territory, and we want to be looking out for selling opportunities here. And except for price climbing back above both the ascending trend line and the key level, can we start considering buying the XAUUSD at this point? So you would agree with me that we are at a crucial juncture in this market. Now, with this information we have on the higher time frame, scaling down to the 1 hour time frame will give us a clearer picture of what market participants are thinking and doing in this market. So let me zoom into the current structure, and of course you can see we have price trading below the key level and the trend line. So I told you we are within seller's territory. So how do we sell and join this bearish momentum if selling pressure persists around this area? Now, for me to sell at this point, I would not want to jump unless price action takes out all the buy pressure that we have here. Look at what has been going on around this area. Every time sellers drop into the structure, buyers come in, take over the market and push it to the upside. And remember that area is a demand zone on the higher time frame. Now let me show you the daily time frame quickly. For those of you who are with me on my TradingView Telegram platform, you will be familiar with this. Look at that. We are within a typical demand zone between the 2,290 and the 2,320, an area which has been consistent with buying pressure since the beginning of the month of April. So it makes a lot of sense to buy above this area, but structures on 1 hour time frame is telling us that price is below a confluence. So if we are going to consider selling within this demand zone area, then we obviously want to see some significant confirmations that sellers are likely going to gain some positive traction. Now, to do this, I would like to mark out the lowest point price action has been for this week, which is exactly at that psychological level at the $2,312 area. Now, let's mark this level out here. Hold on a second. So we have $2,312, right? $2,312 level. So where's my visibility? All right, so we have it right here. So that's the lowest point price action has been for this week. And if I am going to consider selling the XAUUSD today, I would rather want to see price drop below the 2,312. Then at this point, price will have taken out the buy position. So a breakdown retest of that structure right there welcomes selling opportunities for us. Now, in as much as price is still sitting above that demand zone we identified on the higher time frame, buying capabilities cannot be ignored. Now, if we look at this structure here and considering the buy pressure around the 2,312 since the Asian session began, we could see this area serve as a platform to build on a bullish momentum. Now, if we look at this impulsive bearish leg here, it appears we are seeing something like a reversal pattern. It could be a double bottom structure where price breaking out retest the structure will give us an opportunity to buy. And of course, the key level may serve as the neckline of that reversal pattern to welcome buying opportunities for us. So if that is going to be the case, that is if sellers are finding it difficult to break down the 2,312, a breakout of the key level once again could welcome more buying opportunities. And please do not forget, due to the potential extended sideways trading activity in this market, we do want to be giving enough breathing space for price action to move around. So our stop losses should capture all the possible volatility that could happen around this area. So we are going to be having a wider stop loss around this area. That's about 100 pips to 110 pips thereabout for this stop loss. Now, if you are not willing to, probably you have a small portfolio and you cannot afford to have a stop loss of over 100 pips, considering your account size and considering the risk you want to be putting on your trade, then I will suggest that you wait for price to break out the structure. Then a retest of structure followed by buying pressure on the lower time frame will be a good opportunity to buy, as this buy pressure here will reduce the stop loss that you're supposed to put on that one. So it could reduce about 40-45 pips thereabout. So if you don't have enough account portfolio to manage 100 pip stop loss, then you can wait for a retest of structure before jumping into that position. Now, there's one thing I would like to mention here. If price continues to the upside, remember this is a trend line we identified earlier, which has been supporting the bullish momentum, and of course we saw how price broke down the trend line yesterday. Now, usually, and of course from a theoretical standpoint, Whenever price breaks down a trend line, we expect it to come back and retest it in an attempt to continue the downtrend move. So with this understanding in mind, if we are joining a buy position above the 2,320, as soon as price moves close to the $2,327.25 area, which shares a confluence with our trend line, that's about 70 pips thereabout, kindly move your stop losses to secure the current position. So by moving your stop losses, in case price wants to start dropping to the downside from there, we have a worst case scenario that will be on the positive side of our portfolio. So now if price gets into the structure, we want to remain cautious and exercise patience to see how the market will react to that trend line and level. Now if price gets into the structure and we begin to see selling pressure like a double top structure, a reversal pattern, then a breakdown retest of the neckline will be a confirmation to go south. However, if price action breaks out of the structure, then buy pressure above this level will be good opportunities to maximize the uptrend move. So at this point in time, it's a simple setup we have here. The market has been consolidating within the 2,320 and the $2,312 area since in the last 9 hours or so. So let's see in what direction will the breakout happen. Is it going to be to the downside? Is it going to be to the upside? Let's wait and see. Let's mark out these levels and let's position ourselves strategically to capitalize on these opportunities. So this is my simple view on the XAUUSD for today. I do hope I made myself very clear. But if I didn't in any way, please let me know in the comment section. Trust me, I'm here and willing to be of help in that regard. So let's see what we have here. Do we have any questions? So I will take the next 10-15 seconds off, see if there are any questions before we start rounding off on today's Forex Morning Mastery. So don't forget, mark out those levels accordingly. You will be needing them as a reference point to guide your independent trading decisions. And do not forget to give that video a thumbs up if you are yet to do so. Thank you very much. So I see your comment here. Sahad says that didn't want to sell because of 2 pin bars on 4 hours time frame. Okay, all right, no problem. That's another perspective to it. But at this point in time, I guess you're watching my XAUUSD session right now that I just concluded. We have a range bound structure going on right now, which further emphasizes the level of indecision going on in the market. So we need to exercise patience and see at what direction price is going to break before jumping into any position at this point. Then I see you C40 says, this week I am in a loss with gold. The up and down I've triggered the sell stop loss 2-3 times. Yes, I can understand. I also had a stop loss hit yesterday, but mine is 1 anyways. I had a stop loss hit around this area after thinking that the bullish momentum is going to continue. Now this morning we had a sell position, though we moved our stop loss to break even. We've been taken out of that position. It's all well and good, and now I'm concerned about 2-3 times you're saying you're having your stop loss hits. Is your stop loss too narrow? Are you having a very narrow stop loss? That we need to question that. If that is the case, remember I told you at the beginning of the week that we may likely see an extended sideways trading activity as market participants anticipate the US GDP reading and of course the US core PCE data on Friday. So this important event are coming up much more later in the week, and there's a tendency that we could have major key players in the market step aside from the market, causing low liquidity and causing indecision and choppy market condition. And as a result of this understanding, we do want to be having a wider range of stop loss to to contain this volatility in this market. So that is why I said earlier that if you have an account size that cannot contain high volatility, then wait for confirmations before jumping into any positions like breakout retest on lower time frame to join in. So let's see how the market will play out. Then another thing I would like to ask C40 is, how much are you risking per trade? Now, if you are risking an amount that your emotions cannot handle, if you lose that money, then you are not doing things appropriately. So you need to risk as everyone has a risk appetite. So what are your risk appetites? What is it that you can risk in a trade that will not affect you emotionally? If you can do that consistently, even when you lose 3 times, everyone has losing streak too as well. But the most important thing is to ensure that you have your account protected, you have a well-defined risk management strategy. So when you lose, you're not losing significant amount of your portfolio, and when the time to win happens, you can easily recoup the losses you incurred and make much more money on top of it. So I hope I made myself clear there. I see you, Wokocha. Good morning to you, Wokocha. And I see you, C40 again says that if I were a long time kind of investor, would it be correct to say that my stop loss in 2,280 is okay? So which stop loss are you talking about here? Is it stop loss for buy or a stop loss for sell? So 2,280 is way beyond this area, which for me is too wide. Any stop loss, if you are buying, any stop loss should just contain this whole volatility around this area, which is dovetailing to about 110, 100 pips thereabout. So that is the max I will say. So if price action can drop further to the downside from this area, then it has turned bearish, at least in the meantime. So that is my own opinion as regards to that. Then Sahat says we have to exercise patience. You are right, exactly. In this market, this business we are into is an uncertain business. We are in a business of uncertainty, and in the business of uncertainty we need to have an edge, and one of the ways we can capitalize on our edge is by exercising patience, waiting for our structures to mature, plan your trade your plan, and ensure that you mark out levels accordingly, which you want to be using to maximize your position. So that is what we are simply doing here. Exercise patience and let's see where the price is going. So it's okay, I'm losing within my manageable range. All right, that's well and good, C40. So in the absence of no further questions, I'm of the opinion that we have come to the end of today's Forex Morning Mastery. In fact, you guys are wonderful. I really appreciate your support. We have over 12 people on board, and we have how many likes do we have here? We have 10. So we still have some of us amongst us who are yet to click on that like button. It wouldn't cost you anything. This is one way you can actually support this community to grow, and of course by clicking on the like button, the more likes we have, the higher the chances that the algorithm will promote the video to a wider audience of traders who may find this content beneficial too. And thank you very much for supporting the channel. For those of you who click on the like button, I really appreciate it. I see you, Sahad. I see you, C40. You guys are wonderful, and you are very much welcome. So it's on this note we have come to the end of today's Forex Morning Mastery. It has been a wonderful moment with you guys. I really appreciate every single one of you. And today we were able to take on all the 3 financial instruments on our watch list for this week, which includes the USOILSPOT, the GBPUSD, and of course my favorite asset, the XAUUSD. And we were able to identify simple trading setups that we are going to be using to navigate the current market dynamics today. And I do hope you marked out these levels accordingly. If you have done so, well done and kudos to you. All we need to exercise patience, like Sahad said earlier, exercise patience and allow the structures to mature. And for And always remember, I usually say this every day because it's very, very important. I'll keep on hammering it. Always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, you do want to be having a well-defined risk management strategy in place. And for those of you who joined us for the first time, I do hope you are able to gain one or two things from what we discussed here today. Trust me, the more time you spend with us in this community, the better you get to comprehend my analytical approach and eventually use it to develop your own trading decisions. So I hope to see more of you same time on Friday, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to review how well these assets have been doing and of course prepare ourselves for another expected volatile movement in price action as market participants round off their trading activities ahead of the weekend. And remember, we are also going to be looking at the US core PCE, another inflationary gauge data which everyone in the market will be looking forward to, and of course it will be bringing volatility into the market. So I look forward to seeing you on that particular day. So it's on this note, I would like to wish us all the best of luck today. Then we are going to be running the XAUUSD live window later today, so don't miss out on that session. It's starting 5 to 10 minutes into the New York session, and it will last for about 5 to 7 hours depending on the volume of trading activity for that particular day. The link, of course, at the end of the session, you are going to be seeing the link. Click on the link, click on the notify me button so you can get notified as soon as we come on live. So it's on this note, I wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye-bye.